Buying your first home can be easy if you are prepared. Hello, my name is David Johnson and I'm a mortgage banker. And today I'm going to be talking about first-time home buyers and what you can expect as a first-time home buyer buying a home and using a mortgage to do it. Depending on your particular situation, the process between thinking about buying your home and actually getting the keys to that home may take years, months, weeks, or days. It really just depends on where you're at right now and how quick you need to buy a home or want to buy a home. Out of the gate, I need to say that this video is a general description of the mortgage qualification process, and specific underwriting guidelines will vary depending on the type of mortgage that you're getting and depending on your particular situation. But I really today just want to give just a very high level approach to what you can expect as a first-time home buyer, some of the decisions you're going to have to make during that process, and how you can be best prepared for the process. The first step is the pre-qualification, and that is going to be based on your income, your assets, and your credit score. And early on in the process of pre-qualification, I will pull your credit report. The three most important points in a pre-qualification are your income, your assets, and your credit score. So let's start off by talking about assets. Assets are what I will look at to decide if you have enough of them to afford the closing costs and the down payment. The down payment is what you put down over and above the mortgage that equals the sales price. So, like for instance, if it's a $300,000 home and you're going to put a 10% down payment, you would have $30,000 in available assets towards that down payment. Assets can be your savings, your checking, a retirement account, 401k, or even cryptocurrency. Right now, cryptocurrency is much more popular than it was just a couple years ago. And there's still restrictions on how cryptocurrency assets can be used. And right now, with most mortgages, they have to be sold and deposited into a savings or checking account with your name on it before they can be used towards assets. Next is income. The income is what you make each month in your job. And it's based on what type of job you have, whether or not you're commission-based or you receive bonuses, whether or not you're hourly or self-employed. All of those factors will determine how much income I can use towards your pre-qualification. But the income is what's used to make your mortgage payment. So we have to establish that income early on in the pre-qualification process. And that third factor that's really important is the credit score. I'll pull your credit report. If it's just you that's qualifying for the mortgage, I'll use the middle of your three scores. There's Experian, Equifax, and TransUnion. Those are the three different credit bureaus. And we use the middle of the three scores towards the mortgage pre-qualification. If there are two borrowers, we'll actually use the middle of the lower score. So out of the two borrowers, whoever has the lowest middle score, we use that one. And a lot of times with first-time home buyers, you may not have a lot of credit history. You might only have two scores. If that's the case, we'll use the lowest of the two. And in the worst case scenario, if you don't have a credit profile and you don't have any credit scores, I would actually advise you to open up credit cards, take out some lines of credit or at least one line of credit so that you can begin to establish credit, because it'll take about 6 months from the time that you open that credit card until the time that it actually begins to show on your credit report. After we've gone through the credit score, the assets, and the income, we'll start to zero in on what your mortgage payment is going to be based on your income. And the mortgage payment includes several factors. It's the principal and the interest on the actual mortgage amount that you're going to borrow. It's the homeowner's insurance and property taxes. And it can also include a homeowner's association dues or a condo association dues, depending on what type of home you're buying and whether or not it's in an association. It'll also include mortgage insurance, which if you're putting less than 20% down towards the purchase of the home, you will have mortgage insurance. It can either be private mortgage insurance or what's known as mortgage insurance on a government loan. And if you're in a flood zone, if you're buying in a beach community or close to a body of water and you're in a flood zone, we'll also include that in your mortgage payment. There are many different types of mortgages. FHA mortgages, VA mortgages, if you're either active duty or separated from the military, you can consider a Veterans Administration loan. If you're thinking about buying in a more rural area, you can look at USDA mortgages, which are nice because they're 100% financing. You don't need a down payment. There's also Freddie Mac and Fannie Mae backed mortgages, which are non-government. So there's a lot of different types of mortgages to choose from. Your credit score has a lot to do with what type of mortgage you'll look at, and then also what the different interest rates are for the different types of mortgage programs. So that's one of the things that we'll talk about a lot once we get through the pre-qualification, is deciding what type of mortgage you want and what type of interest rate you want. As a first-time home buyer, it's important to consider during the pre-qualification your ability to afford the mortgage payment. Sometimes I'll run into first-time home buyers that they can qualify for a much more expensive mortgage payment than what they actually feel like they are comfortable paying. So it's important to always think about your lifestyle and your quality of life, and whether or not you are going to be detracting from that by buying a more expensive home and having a more expensive mortgage payment, even if you can afford it. So now that we've talked about the credit score, the income and assets, and how those impact your pre-qualification, as a first-time home buyer, I always explain that you qualify, or you may qualify, for down payment assistance. Depending on the type of mortgage that you want to get and what type of home you want to buy, down payment assistance is available through city, county, state, and federal government organizations, and they can be used to be applied towards your down payment as well as your closing cost. And it's something that only first-time home buyers can get. So down payment assistance is something that is important to consider whether or not you actually decide to go down that road or not. Now that we've finished the pre-qualification, I always give my customers what's called a loan fee worksheet or fee worksheet. And it's a document that shows you what your closing costs are going to be. They're estimates at this point because you actually aren't under contract and you haven't chosen a house to buy yet. But it's a good way for you to see in black and white what you're going to need to bring to closing based on the loan amount, how much of your assets you're going to use towards buying this home, and also what your proposed housing payment is, which we talked about a little earlier. That's the principal, interest, the property taxes, the homeowner's insurance, mortgage insurance if it's required, and homeowners association dues or condo dues, and even flood insurance. So there's a lot of different fees that can go into that mortgage payment, and you'll have a chance to see them in the loan fee worksheet. So now is the fun time to begin looking for homes. You've been pre-qualified, and if you haven't already chosen a realtor to work with, now would be a good time to find an experienced realtor in the market that you're trying to buy a home, and talk with them, and make sure you have a good rapport with them, because they are going to be representing your best interest in the home buying process. So I always encourage first-time home buyers who previously haven't bought a home and have never been through this process to work with a realtor, because it's really important for you to have that person who's going to be able to give you advice on the home inspection, for instance, whether or not you're paying too much for the home, and someone that's going to have your back during the process. There are several resources to use to find a home. Zillow is a very popular online resource, as is realtor.com. And your realtor will have access to the MLS system, and that's a nice way for you to find homes through your realtor that fit all of your criteria. So once you start finding homes that you're interested in, the realtor will actually take you to them. You'll see the home or the townhome or the condo, whatever type of property you're going to potentially buy. And you will find one that you want that's in your price range, in a neighborhood that you want to live in, and you'll make an offer. And once your offer is accepted and the sellers have signed the sales contract and you've signed the sales contract, we can actually begin the loan process, which is very important, because at this stage, I hand off your mortgage application to other people that I work with. Loan processor and underwriter will start looking at your file, and they really double check what I've already done. So as the mortgage banker, I'm going to do the pre-qualification, and I'm going to make sure that you have the right amount of income and assets and the credit score. But once you go under contract, other people will make sure that what I did was done correctly so that you actually qualify for this mortgage. And depending on how quick you want to close on the home and how quick the seller wants to close on the home, we can do this in about 20 days. So you can go under contract on that home and actually be able to close on it in less than 30 days if you need to. If there's any additional paperwork that I didn't ask for during the pre-qualification process, this is when it comes up, when it's requested by the underwriter. Rental verification is one of those areas where we might need some paperwork showing that you've been making rent on time. If you are actually renting, if you're living with a family member now or you haven't been paying rent, that's okay. There's no rental verification that's needed. We'll also be working with other third-party vendors like appraisers, the title company, or a title attorney, depending on your state, will be involved in this underwriting process. And all of these pieces of the puzzle are happening behind the scene during the loan process. And once you have been cleared to close by the underwriter, you can actually schedule a closing with the seller. The title company will work with you on transferring the funds to their office to be used towards paying the closing cost, and you're ready to close. And this process can be, like I said, less than 30 days, or you can take a lot longer than that. It just depends on when we first meet where you're at in the process. Are you ready to go out there and buy a home next week, or do you want to look around for the next 6 months? It really doesn't matter how that process works. It'll be based on your particular situation. But the important thing is that I'll be there with you from the beginning until that closing, and I will help you stay prepared and keep the whole process as stress-free and running as smoothly as possible for you so that your first-time home buying experience will be a positive one. I love working with first-time home buyers. They're so excited to get into their first home. It's a wonderful process for them to prepare for their financial freedom in the future and to build equity in a home. Just to wrap up this particular video, I started off by talking about the pre-qualification. We went through that process of figuring out how much you can afford in a mortgage, and then you actually started looking for homes and found one that you wanted, went under contract. You're working with a realtor to do that. We started the underwriting process, which happens after you actually go under contract for your home. And now we've closed, and the title company has given you the keys to your new home. It's a very joyful experience at this point, and I just appreciate you watching this video. I hope you've learned something. If you have any questions, please comment below. I'll be more than happy to talk with you about your particular situation. And like this video, and if you'd like to see more of them, please subscribe to my YouTube channel. Thank you very much.